everyone. Welcome to the Stock Market Morning Prep video for Friday, August 1st. Markets definitely took it on the chin. Red across the board. Dow Jones down 317, Nasdaq down 93, S&P down 3940, and the Russell 2650, all down. And when we had the video yesterday morning, we were down about 13. We gapped lower, and for day traders, traders that like to just trade intraday, it is a little tough because once you gap down and then they just continue to go lower, you're waiting for your setup, your trading plan, and sometimes it kind of gets away from you. But nonetheless, all in all, it was a decent day yesterday. For those of you who were trading, should have made some good money. Sometimes it's like shooting fish in a barrel, but other times it's like a wait and see type mode. But either way, it was a decent day. Now, that whole stuff with the Argentina bank possibly defaulting, and then again we have our geopolitical conflicts going on, and we all know about the Israel and Gaza, in the Gaza Strip, with the Palestinians, and then of course the Ukraine and Russia, which is a real big one. More sanctions were implemented on Thursday, and then of course Iraq. So there's a lot going on here, and when the markets really start to get hold of what's happening, then it's not that fairy tale market anymore. And we kind of been going along with this thing for a while, saying, wow, the market's just ignoring, and it will happen. I mean, there are times when, as a technician, you'll say, hey, this should not be happening, and sure enough, pretty much most of the rally of 2014, from I would believe even let's say April, early May lows. It's just unheard of. It was unprecedented that we had a market that continued to move higher just up until this early part of this week. I think we've only had 5 or 6 down days, and that's actually, it's very worrisome, because when the markets do correct, it gets violent, and it's going to get fast and furious to the downside. Is that what is happening now? I don't know, and I'll tell you why. Well, why, Mark? This is this is exactly what you've been saying for weeks now, and I was saying that there's going to be a decent sell-off coming before the end of the summer, and it's only 2 days, guys. That's the reason why. It's only 2 days. The markets are down yet again, about 11 and a half handles in the ES electronic session. So could we be a start of something? I do think so. Do we just go down from here? I don't think so, and I'll tell you why. We have non-farm payrolls that come out today. Whether the number be good or bad, okay, I think it's a catch-22 either way. I think it's going to be bad for the markets either way. But it's not what the numbers are. It's how the market participants react to the number. Okay, so even if the market is, even if the information that they give with non-farm payroll numbers are good for the market, and they rally them, or maybe it's bad for the market, good news is good news, bad news could be bad news, or good news is bad news, vice versa. It's just so crazy the way they think, but it doesn't matter. It's what the masses are going to do. So we need to watch that. So if the information that we get are good, and we had a 4% print in GDP this week, then I think that we probably get a bounce. Here's the ideal situation, scenario, actually, excuse me. I think that I would love to see that we get a good number, or a number that the bulls want to see, and they buy this dip. And then we have mutual fund Mondays, which would be the first start of the month, and then we always have that mutual fund inflows that come in on Monday. They put new money to work for the first week. So we have a little bit of buying coming in today, buying coming in on Monday, and then a little bit of buying coming in on Tuesday, and that's pretty much it. Market reverses into Tuesday afternoon and closes near or at its daily lows. And then to me, I think that would be confirmation that we are headed lower. Okay, now that's the perfect setting. Does it happen? Absolutely not. Even if maybe Tuesday's bullish, and then next week Wednesday, we get that sell-off, that reverse that we're looking for. So keep an eye on that. But the markets are in trouble. We did do some technical damage in the indices that we follow. The ES is almost at a point where if we break lower on a closing basis, and we hang down that area, chop around for a couple of days, I think you see pretty much would say, and I'll show that you in the charts, that we're going to get confirmation that we're going to be headed lower and maybe looking for that 8 or 10% correction that we haven't had in 3 years, which would be ideal for the markets heading into the fall. Okay, but anyway, let's take a look at a couple of indicators. And why do I think that the markets are probably due for at least some sort of a bounce? Well, we have the McClellan oscillator, very, very reliable for overbought, oversold readings. Okay, now when you have a print below the Bollinger Band and below this area here into that 80 to 100 area, you usually get a very big spike back up again. That gets everybody excited. Shorts cover, bulls get into rhythm, and new money gets put in. But the problem is that this is just a quick move up, and then we should actually roll back down again like this, and then you come in again. Okay, so this is why I think that we're probably due for a bounce. It may not happen, and the only reason why I say this is because that we're up so many days in a row, or I should say weeks rather, that that's it. The game's over to the upside for at least a few days of really hard selling. So that could happen too. We could get extended like we did to the upside, to the downside. So we could have a negative 100 plus print in the McClellan oscillator, and I still wouldn't be wanting to pick a bottom here. What you need to do is when the markets close lower like it did here today, the McClellan oscillator has to close back in the Bollinger Bands the next day, and that would give a buy signal to the market, at least on a temporary basis. Okay. Another thing that gotten a few calls on was crude oil commodities, and I know you like crude oil. I love crude oil, but do I buy crude oil here? Unless you're a long-term investor, I would be nibbling in here absolutely. But why? Because we have mass liquidation going across the board. There's margin selling going on in all commodities, and the main reason why, first of all, there's not enough geopolitical headlines going on that's going to push oil up. Will it? I do think it will. But the real main culprit right now is the dollar. The dollar's catching a bid. I'm going to show that to you next. Let me just show you a couple more. Here's the bullish percent. If you remember, I mentioned here, we were right about here. I said, let's see what happens. But this is on a sell signal. If you go back to my videos, we should be selling off here shortly. But let's see if we get separation from the 8 EMA. All right, and sure enough, we did. Look at this big move lower. So this is on a full-fledged sell signal, guys. Full-fledged sell signal. So very reliable. So I'm really, to me, I would say, other than a quick day trade to the upside, I'm going to be looking for a lot of shorts, a lot of short plays going into next week. Today could be, a little bit iffy about additional shorts. Not too sure, but you have to be real careful if you're a bull, and that's why I said there's no reason buying the market at 1970, 1980, 1950 in the market. You will get a chance to add to your long position for the longer term investor. There's absolutely no reason. The markets are fully, fairly valued. There's no reason to buy anything at these levels. And that's what the pundits want you to think, New highs, massive sell-off. Stocks above the 50-day moving average selling off while the market was going up. The NASDAQ stocks above 50-day moving average. I showed that to you yesterday. And let's look at the breadth, advanced decline with volume. This here gave the total picture. As you can see, from here, we were making lower lows and lower highs, and yet we continue to move higher while this did not. This eventually catches up. This is the internal breadth of the market. This here is basically, the main source of what the market is doing under the hood. So when this is going lower and that's going higher, that scares me. And sure enough, that's what we had. And now we have a market. We had a little bit of sell-off. But it's going to be interesting to see if this market can put a couple of strings of down days together. And that's yet to be told. But let's see what happens. Here is your dollar index, the DX, and look at what's happening here. Now, if you go back, you'll see we have this descending triangle. If you remember back in May, we broke lower, and then we popped right back up again. We bull flagged right into the downtrend, the upper end of that downtrend line, and sure enough, we chopped around a little bit, and now we're breaking out into new highs. Short term, that is. We are at the 1272 extension, so the next target will be the 1618. This is what's putting pressure on commodities right now. Gold, grains, some of the grains, but mostly crude oil. Massive liquidation. Crude oil is getting called on margin calls. Tons of margin calls are getting increased. So that's what's happening here. Okay. Now let's take a look at the ES, and this is why I say this is the bottom line. Here is the line in the sand is right here. If you go all the way back, you'll see this big, massive uptrend line. I have two trend lines, one from here, from here, from here. We are at it right now again. If we break that, okay, if we break that trend line, then I think you see that 8 or 10% correction, if not maybe more, because we haven't had a 10% correction over 3 years. Again, not healthy, and that's not fair to the longer term investor that's holding, and that's what happens when the government puts all of the money into the market to create that wealth effect. And sure enough, in 2 days, right? 2 days, right? This is this morning now, in the pre-market, you've wiped out all of June and all of July, okay? And now you're into May. Not quite May, but you're into June. So, it's terrible. In 2 days, you did all of this work for what? For a 2-day down move, you just cleaned out all of June and July. 2 months in 2 days. So this is what I'm saying. Use caution. I've always mentioned that. I sound like a broken record, but you have to use caution in this crazy market. Or, again, buy protection. Diamonds, as you can see, look what happened. Wiped out pretty much the whole summer, and we are now we're into May now. All of the summer's movement up, we wiped down in 2 days. Okay, so now this is the line in the sand here. Of course, the 200-day moving average just underneath that, and if we take that out, then I think you're going to see some crazy selling, guys. Let's just be careful. And again, this is a little early. This is not anything that I think is going to happen today or tomorrow, and I don't think the market's going to crash. But I do think that we're coming into some weakness, and I think we'll see weakness pretty much, and some chop going into August. Again, I don't know how extensive it is until the market really gets going, and we see what type of damage we've done. Now you can see here in the transports. Remember, I said the repetitive patterns a couple of days ago. Here, lower. Here, I said, watch, guys, be careful. Sure enough, we broke now the 20. The 8, the 20, the 34, the 50 is gone. Next is going to be that pivotal low that I have here that I've showed you where this is the next target. After that would be the upper in the trend line, and then, of course, the 200. Now, remember, watch the transports as well. They start to break lower really hard, then pretty much across the board, a lot of the indices will follow because this is the main leader of the 5 that we follow. And the other one, culprit, is the IWM, and that's why I said, guys, be very careful. This is not breaking down. This time it's different. I remember here, when we were breaking down for 2 months and the markets could care less, this just seemed a little different, just a little feel, nothing more than that. And now we're breaking down again. Here's a 200, okay? Now the next stop, technically, would be the low, this local low here. All right? Now, does it just go straight down? I mean, obviously it can. I don't think anything goes straight down, especially when you have these large engulfing candles. Usually retraces back 50% of the candle and then starts to head back lower again. Last is going to be the Qs. Qs really took it on the chin, guys. 20, we're at the 34 right now, but holding up better than the other indices. Remember, watch the semiconductors, the microns, the WDCs, some of the other technology stocks, the big tech. When you have the leaders like the Amazons, the Googles, the LinkedIns, the Teslas, and they're all breaking down now, you have to be careful. Because when they start to break down, there's a new dynamic forming in the marketplace. And I think right now it's setting up for the downside. So let's use real caution here. Be careful for today. Non-farm payroll numbers come out at 8:30. Let's see what kind of reaction we get to the market. And I do think we get a bounce, though. At one point in time, I think we get a bounce. If not today, maybe Monday into Tuesday. But I think that's going to be an ideal short setup going into next week. Have a great weekend, everybody. We'll talk to you on Monday.